Good morning, everybody, and welcome to the Trade Out Loud trading room. My name is Anka Metcalf, and today's Monday. It is October 3rd, 2022. It is 9:16 a.m. Eastern. I want just to have a quick sound check. Let me know if you guys can hear me, if you can see the screen. All right, perfect. Perfect, everybody. So welcome to a brand new quarter of trading, brand new month of trading, brand new week of trading. All right, so it's October and we have a lot happening into the fourth quarter. So I decided to do a little bit more of a macro to micro analysis into the indices and some commodities, and let's tackle bonds a little bit. Because it is the beginning of the quarter, and we have had a lot of selling going on until the last quarter. We didn't see any kind of window dressing relief because there was no reason to dive into any of high-flying stocks or indices or ETFs for that matter. So it was just a massive distribution for funds, for institutions, for portfolio managers, etc. Let's see if the pace is going to pick up. Now, October comes with a different vibe. October comes first and foremost with a brand new session of earnings, and the earnings season will start October 17th. We have financials that are going to kickstart earnings season, and then we have about 6 weeks from then for power trading. What that means is that fundamentals are going to have a say and will likely impact the price action more than news-related economic releases and other types of narratives. So for the last quarter of the year, like I was saying, it is a little bit different. It has a different vibe to it. More volume is coming into the market. And first and foremost, we have more volatility. So in general, historically, October is one of the most volatile months of the year. But volume coupled with volume with volatility is a really good combination. It's not a great combination when we have volume, when we have low volume and high volatility. All right, so let's start with our calendar for as a big outlook for the month of October. So 6 weeks into October, we are going, well, I would say 8 weeks from now, we will have 2 weeks right now where the price action is going to try to, kind of like get in gear for earnings season. Starting with October 17th, we are going to see a little bit more pressure into price action, and that is going to put us into November just in time for Thanksgiving, which I call cornucopia trading, because Thanksgiving, right after Thanksgiving, we have Black Friday, Cyber Monday, which kicks off the holiday shopping. And then you have a little bit more pressure into these online retailers and also brick and mortar retailers. And of course, transports, because we need to see the sun. Transports guides the economy. After which we are going to go very quickly into December trading, where basically everything is kind of like winding down. We're looking at specific trades because we're heading into the end of the quarter, where we will have again quadruple witching option expiration. We will have again the window dressing effect and probably the January effect. These two are going to be more important than any other quarter that we've had so far. All right, so let's dive into our calendar for this week. That was a little bit of highlight just because we're starting a brand new quarter and it's so important. But let's start right now with what we can expect this week and especially today. So this week we have a bunch of FOMC members that will be delivering speeches. So we're going to have to again navigate around these speeches. And we also have tons of major releases. For example, one is today. We have the ISM manufacturing PMI, which is coming in at 10 o'clock. Very delicate time for us into the market. Then tomorrow we have Joel's job openings. Guess what? Still coming at 10 o'clock. And then on Wednesday, we have the OPEC meeting and the OPEC JAMC meetings all day long. Plus at 8:15, we have the ADP non-farm employment change, and we have the 10 a.m. ISM services PMI. On Thursday, we have, of course, unemployment claims. We have, again, a lot of releases coming in on Friday, high impact releases with average hourly earnings, non-farm employment change, and unemployment rate. This is just to give you an idea of how busy our calendar is going to be from now on. And definitely, we're going to have a lot more releases than this. So just to start off today at 9:45, so that is to be 15 minutes into the trading session, we have the final manufacturing PMI. At 10 o'clock, we have the ISM manufacturing PMI. So we have the final manufacturing, then we have the ISM manufacturing PMI, which is going to be really a high impact. We have construction spending, we have ISM manufacturing prices, we have Ward's total vehicle sales today. And we have, again, at 3 o'clock, we have FOMC member Williams that will be speaking again. Like I said, tomorrow we're going to continue with these speeches. William Mester is going to speak on Tuesday, and then we're going to continue throughout the week. So cautious on that, because any kind of narrative is going to disrupt price action temporarily, hopefully. All right, so this is the economic and what we're looking for today. The macro look, we're going to take let's say a look and see where we're at right now. So let me just get ready for that. All right, so let me take you guys to a different screen, because we're going to start, you know what, we're going to stay on this screen for just a little while. Let's just take a quick look and see, hey, what's going on? All right, so we're about 7 minutes into the New York trading session open, and the Dow's already up 350 points. We're up 1%. The M&E S&P is up almost 40 points, about 1%. NASDAQ is up 80 points, about 0.75%, and Russell is up 25 points, 1.5%. So we're seeing a nice symmetry and so far synchronicity throughout the pattern and gains. And also we're having a pop in oil, and in fact, we're going to go through some more energy commodities, but oil is getting a pop. It is up $4.50, about 5.6% to the upside, and metals are also seeing a little bit of a surge. We have gold here, which is up $6.50, about 0.39% to the upside. All right, so what we're going to be doing right now, we're going to get into our analysis screen, and we're going to dissect price action and see what we can expect throughout this trading week and, of course, this trading day. So we're going to start with a macro look. The S&P pullback very close to the 50 SMA confluence, mega confluence area into the 3550 area, 3550 to 3580 area. This is where we're getting this little bounce. Let's see how this bounce is going to play out. We have some options here, but we are seeing a lot of substantial support. We have been talking about this macro support a couple of weeks ago and the possibility of a pullback into the 50% retracement. We are almost there. We have also achieved the 200 SMA on the weekly chart, which is significant. We're also testing the prior low from June. Yes, we did dive in a little bit, but because of volatility, we can still establish a pivot into this location. So I think that the biggest area that we need to watch this week is going to be 37.65. If we break above this area, we're going to have a double bottom confirmation, and we're going to see a little bit of relief in the rally as we're going into earnings season. If throughout the trading day today, we will have a close below 3,600 and in fact below 3,580, we are possibly going to see some more pressure in price action, where we're going to see the price tumble, and most likely is going to accelerate towards this I would say 3420 to 3400. The overnight price action was fairly sideways. We had a little bit of a dip lower with a brand new low, which was expected. Very thin volume into the Asian session that we had last night. We dove right into a pivot you can see here that we had a low into the 35.71. We rotated back higher, and we have this really nice base that formed in the overnight trading session. And at 5 a.m., we had the burst to the upside. And as of right now at 9:30, we have been up for 4.5 hours almost. So 4.5 hours of pressure to the upside. However, we are reaching an area of minor resistance, which is created by the prior low, and also by this declining 50 SMA right here into the 36.50 area. If throughout the trading session today, just saying, we are going to navigate, and if we are going to get into the 3700 area, then anything that is over 3,700 is going to be a line in the sand. We're going to be more bullish than bearish, but it also will represent an area of rejection, and the price can come back lower. So again, price action, you can see that I don't have any levels for the trading session today, which means that today, again, we're going to go towards price action trading. So that means that we're going to be waiting for the open to see what is the directional bias for today. Obviously, the price action has been bullish and has been moving higher from 5 a.m. like I said, and throughout all the indices. All the indices are basically carbon copies. We're going to go through them very quickly. But all in all is that we are into resistance. It all depends on this last hour, how we progress. So we have literally less than 3 minutes into the New York trading session open. And if we start breaking the 3650, we are going to go probably in about 10-point increments to the upside. And then we have another level of resistance into the 3670. And then these are the pressure points that we've had from this sideways price action, which we had into Friday before we actually had the meltdown. So definitely in all today, we need to, the more pressure we put in price to accelerate higher, the better it is for tomorrow's trading session. And in fact, I do like this pop-up off the 200 simple moving average. Let's talk about Dow. And the Dow is very similar in pattern, coil into the 50 SMA, also into massive confluence level support, dove a little bit below the 200 SMA right now, putting it in an effort, trading in sync with the mini S&P. It has a little bit of room to progress higher to 29,550, break 550, then we're going to accelerate higher. The big line in the sand this week, it'll be for price to trade above 30,000. If we see the price around 30,000 or over 30,000, that is going to be bullish for us. Again, and into the intraday look for us as day traders, let's take a look at the 1H chart and see if we are going to digest this treacherous resistance into the 29,200 to 29,180. And of course, we have NASDAQ that has been also weak. You can see here that is below the 50% retracement going into the 50 SMA, magnet for everything else. Also 200 SMA revisit, breaking the prior low from June. And again, we're seeing a little bit of a pop-up here, which is good, which is at key level 11,000. We are again into resistance area into 11,140. We also have the decline in 50 SMA along with confluence resistance all the way into the 80. We break above the 80s. We have room to accelerate a little bit higher. Again, pay very close attention, and and in the trading room, I will highlight the trades that will be in play today. So so far it looks that we have a little bit more lucrative price action than what we had on Friday. All right, so last but not least, let's take a quick look at RTY, and the session has just started. Like I said, we're not going to take any kind of trades right off the bat, but we are going to look and see if we have any other opportunities, day swing into some other commodities as well. All right, RTY doing a dance. I like the fact that it held. It was one of the strongest indices throughout last week. It held the June low, and it's actually trying to rotate. I love this doji here, and in fact, if we start trading above 1732, we may have a little bit of short squeeze going into the 1800. I love the fact that it's consolidating as well into a mega support zone, minor support zone as well, should I say, into the 1700 to 1710. Very intense price action here. This may have the power to change the trend if it wants to, because it's consolidating very nicely. Take a look at this prior high that we had in 2020 that is stabilizing. The price is trading right now into the highs of 2020. This is very, very interesting, into the pre-pandemic highs, should I say, because we had a different high in 2020, but this is the pre-pandemic high in 2020. So this is very interesting to hold, because this is going to create minor support for our current price action. So today, what are we looking for today? We have a dance back and forth, back and forth. We don't have high velocity here. The high velocity is going to come over 1730. All right, so what we're going to be doing right now is we're going to take you guys to the panel and see what we have in store for other commodities, bonds, etc. So let's take a look at energy, because we tapped into energy a little bit, and I told you guys that oil is a little bit higher in the trading session today. We actually had a little bit of a pivoting effect today, executed today. We have the new support into the $79. We also have our Bob gasoline with support into the 236, and we have a nice bull flag formation as well. Bull flag formations into all these energy commodities, and including heating oil. Natural gas is feeling a little bit more under pressure, violating the 200 SMA, which is here's below my cursor, violating the 200 SMA. So this can roll a little bit lower. We'll see how the day is going to be. It's totally divergent compared to the oil markets. All right, let's take a look at bonds on Friday and also on Thursday. I mentioned that we may get a little bit of a pop in bonds if the ZB, the 30-year, is going to start breaking above the 128. We have room to about 129, not much. That's going to be the next line in the sand where a decision may be reached. And also ZB, take a look at ZB here, 130 is going to be the line in the sand. We start breaking above. Again, we can swoosh a little bit higher into the 113.20 to 22. We'll see if it's actually going to, try to break above this 20 SMA. Also, let's take a look at the VIX. The fear factor, we have been coiling all last week. We haven't broken above the high. Like I said, we're establishing a new plateau. If the VIX is going to start trading below, if the VIX is going to start trading above 3280, that is going to start generating a higher price action, and the market is going to implode. So this is a sign that we're going to be looking for into the market throughout this week. If the VIX are going to start breaking below 2950, then the market is really going to start screaming higher. Let's talk about metals. Silver, I've noticed it on Friday, and on Friday we wanted to take silver long as a day trade. We didn't manage. We actually did not have a chance to, because it started to run higher just above the trigger, and it just, kind of like came super, super high, and we couldn't take it as a day trade. Finally, we had a rotation. Again, this is a massive resistance into the $20. Remember, $20 is kind of like that coil around area into silver. Here's what I'm seeing. Break above $20. We are going to move higher. You can use a stop under $18, and it has a lot of room to progress higher. In fact, the next level that we're going to be looking at is going to be into the $21. If you feel that silver futures is too rich for you, you could actually opt for SLV, which is traded in shares, and it's definitely very easy to position size, and you don't need that much of cash to have a hand for your position sizing. Platinum a little bit higher is going to try to go for a gap fill into the 901. We have copper, another metal that is a little bit lagging into this point. We have the dollar, which is trying to do a rotation off of the 20 SMA. It's looking fairly bullish, and we have a fairly weak euro starting the New York trading session right now. We're having soybeans that are pushing a little bit higher on Friday. They actually had a little bit of new high, not tapping into the 950 just yet, and a consolidation above the 200 SMA. You're going to see that throughout, all these patterns. They're fairly sideways. And in fact, corn very sideways as well. If it breaks 700, I think that it's going to start, printing higher prices. But in the meantime, it's still, kind of like very, very sideways. Soybeans taking a dive on Friday, trading below the 20 SMA. It looks like it wants to head on a little bit lower. Right now, it's trading within the range that it was on Friday, a little bit to the lower price action into Friday. We have oats that are just gaining a little bit of attraction here, and the price is trading above the 20 SMA just by a tad. We have soybean oil here that is trading a little bit lower, and we have contract roll into hogs. All right, so hogs open lower at 76.95. And we have live cattle, which is trading above this range, massive range that we have since August, and trading into the 148. All right, this is the overview for today, and let's get back into our panel and start watching for trades. I've also done a recording, so you guys can have it at hand for the duration of the week, which is going to be super handy because we talked about the possibility of a macro aspect of it. So we can see how that is going to fall into place. So for those of you that are interested in reviewing this pre-market game plan at the beginning of the week, I intend to do this on each Monday. I kind of went back and forth because we did have a session that was ready scheduled, but it didn't work out, so I had to share via Zoom. So I do apologize for that. I don't know. Next time we're going to try. This is just a test, like I said. This is just a test that we're doing, and hopefully it's going to become, kind of like a household kind of event for Trade Out Loud. All right, so we're going to stop streaming on the YouTube channel. And don't forget to go on the YouTube channel if you want to review this recording again to see how the action is in sync. But before we go there, before we wrap it up with the pre-market game plan, let's talk a little bit about what's happening now into the market. So oil a little bit higher, gold is kind of like trending, that's for sure. It's started to trend from the overnight. It may have a little bit of traction later, and so far we're having this pullback into NASDAQ, the S&P. Our RTY is a lot more aggressive to the downside. Let's take a look and see if the current support levels are going to hold, and we're going to be looking for a pullback buy. RTY may be bullish over 1681. So let's take take note of that. And remember, price action tends to be subsiding a little bit right now. So drama open as always. All right, so hope you guys that are viewing right now on the YouTube channel are going to